Hey traders, what's going on and welcome to our new video. So in this video, we're going to go over the 5-step process that you should follow in order to increase your chances of being consistently profitable in the markets. So let's take a look. So you need a good fundamental idea, the right state of mind, good technical analysis, predefined risk, a nice trade execution and management, and all this would lead to a highly probable trade, which will definitely increase your chances of making big profits in the market. So step 1 is fundamental idea. So what is fundamental analysis? Fundamental analysis means that you are analyzing different economies worldwide and their potential future based on the current economic situation. Our goal in the forex market is to achieve a potential thesis which could benefit our technical analysis. We can do this by finding one weak and one strong economy, currency, and link them together to get a good fundamental bias to potentially take advantage of the future or existing trend, bearish or bullish, especially beneficial for swing trading style. So step 2 is the right state of mind. So even before you sit down to your trading desk, ask yourself, am I really ready to trade? So the market is not going anywhere. Do what you have to do to feel absolutely ready to make sound decisions in the markets. So here are some tips that could help you increase that and be in the right state of mind when you sit down ready to trade. So cold showers before your trading could be very beneficial. A coffee, meditation, or simply taking some notes, getting some emotions out on the paper could increase your chances of making good decisions. So the third one would be technical analysis. So we want to construct a good technical idea using top-down analysis. In order to do that, we want to start on the daily time frame. So the daily time frame is cycling to the downside. As we can see, the market is making lower lows and lower highs. So the same goes for the 4-hour time frame. So what does that mean? So higher time frame market structure is confirmed. Now it's time to draw analysis on the 1-hour time frame to find a potential trade setup. So as we can see, the market is cycling to the downside. As you can see now, we have 2 touches on the trend line, and our Fibonacci tool on the 78.6 could be a potential trap to take the trade from. So area of interest is marked. We have bearish market structure on the daily, 4-hour and 1-hour. So we have a potential third trend line touch, a Fibonacci retracement. We now have to wait and see what the market is going to do. We are absolutely ready to take the trade if price comes to our trap. So lastly, step 4 and 5, risk management and trade execution. So the market is doing the same thing, so this is the same scenario, but now price came to our technical trap, 78.6, the third trend line touch. So before placing any trades, you should go over the checklist, which could potentially increase the chances of you making the sound decision in the market. But keep in mind, this is not the only way that you can do it. Of course, this is just a few tips from us. You can collect and do your own checklist based on your trading style and how you like it. So what you can ask yourself, would you take this trade if you would be managing a 6-figure account, right? So secondly, if yes, according to your predefined risk trading plan, is this an A, B or C setup? So before calculating your lot size, you need to know exactly when to enter, exit your trade. Does your risk to reward make sense? So you need to calculate that before you place a trade. So now it's time to calculate your lot size using a position size calculator. So you would need stop loss, entry, take profit and risk percentage. Now it's time to execute your idea and manage your trade according to your trading plan, no matter what. So for example, let's say that we just want a 3-to-1 risk to reward trade, right? Should we be happy? Yes. Because of a winning trade? No, right? We only should be happy because we followed a 5-step process, which will help us be profitable and make good decisions on the long run, right? A specific outcome of a trade really doesn't matter over the long run, right? Over 100, 200 trades, this one doesn't matter, okay? So keep in mind, this will help you be emotionally unattached to a specific outcome, right? You only care about the process and that you follow these rules over and over again. Congratulations! Not because you won the trade, but because you went through the 5-step process, which will help you make sound and objective decisions. This will definitely increase your probability of being profitable over the large period of trades. So now it's time that we combine everything that we've learned in the real market examples. So welcome to the chart, guys. So firstly, we need a good fundamental idea, as we said. So for this example, this is 2021, 2020, right? Let's say, for example, the Europe is doing very bad with vaccinations, so the Europe is naturally falling, right? And the AUD is very strong currency at the moment because of the risk on sentiment and the positivity flows in the market. So because of this, we can have a good fundamental idea that this pair is potentially gonna go further to the downside, because euro is weak and AUD is strong, which will eventually push this pair lower to the downside. So now it's time to ask ourselves, are we in the right state of mind to trade and make the sound decisions? So in this case, let's say that we just took a cold shower, we did some journaling, and we went on a fresh air, right? So we are ready to trade, and let's go to the step 3 to find a good technical idea. So step 3 would be constructing a good technical analysis idea. Alright, so let's start on the daily time frame and let's see what's going on in the bigger picture. Does this pair really have some downside potential? So firstly, as we can see, we need to mark out this daily zone, right here. Then if we zoom out a little bit, we can also see this area of interest down below, right here. And further to the downside, maybe we can take these rejections right here. So this will be the daily time frame, right? Let's align this. So as we can see, the daily market structure is clearly bearish, right? So now let's go on the 4-hour time frame. If I zoom out a little bit, as we can see right here, we made a lower low, right? And also this was a breakout with a lower low of this gray daily zone, right? So this has potential to go further to the downside. So the market structure is of course bearish. Now what we can do is connect a descending channel from the top to the wicks and to the down point right here, right? So this could potentially, this trend line at the top could be our technical confluence. We have these two moving averages, so keep in mind we are on the 4-hour time frame, so the moving averages are strong on the 4-hour. And what we can also do, right, is we can connect a Fibonacci from the swing high to the swing low right here, right? So let's connect it to the swing high, to the swing low. And as we can see, right here, so in this area, this would be a good technical idea to take the trade from, right? So for example, if price comes to this level, this will be a good trade and we will be ready to execute. So we're in the last step. As you can see guys, price came to our technical trap, right? So we have a trend line on the top, we have the Fibonacci, and we have the moving average, right? So before we take a trade, we must go through the checklist and see what's going on there and if we would really take this trade. So first one, would you take this trade if you would be managing a 6-figure account? Yes, definitely, because this is a trade according to my trading plan. If yes, according to your predefined trading plan, is this a B or C setup, right? So let's say, for example, this is a B setup, okay? So we're gonna risk 1%. So before calculating your lot size, you need to know exactly when to enter, exit your trade. Does your risk to reward make sense? So in order to do that, we should hop on the 1-hour time frame and see what's going on the 1-hour time frame. So as we can see, we made a clear rejection right here. So if we connect our tool, our entry would be right here, stop loss above the Fibonacci level, right? And till double bottom, this is 2.7. Of course, we take some partial profits on a double bottom. So our risk to reward makes sense, okay? So this is a good trade to take. So right now it's time to calculate our lot size, right? With a position size calculator. So our entry would be right here, right? So we need our stop loss, entry price, stop loss in pips, take profit price, and risk percentage, right? So entry price is this blue number, right? 1.6207. So let's insert this 0.6207, okay? So our stop loss price is above here, above the Fibonacci level, so 1.6273, okay? 1.6273 right here. So stop loss in pips, okay, so this would be 68.2, okay, so let's do 68, okay. So for the take profit price, we need to look on the 4-hour time frame, okay, to see. So we have our fib projections down below, okay, so this one or this one, okay, so let's do the last one, for example. So let's do this one, so 1.57777, okay, so let's do that, 1.5777, okay. Risk percentage, as we said, would be 1%, okay, for this example. So we have all the numbers that we need, okay. So now it's time to put everything into our lot size calculator and execute our trade. Okay guys, so now it's the last step. We need to calculate our lot size, right? So in order to do that, you can simply go to nashmarkets.com, right? And then click on the Nash Markets app, right? And view app. So this app is completely free. You just need to access it from the web, right? And of course, just put in your numbers and this will calculate your position size for you, okay? So account balance, let's do $10,000 for this example. Risk percent is 1%, asset class it's Forex, instrument would be Euro AUD, okay? So entry price, just copy that number. So we are short, right? Because we are selling Euro AUD. Stop loss price would be 1.6273, right? So this would be 66 pips of stop loss. Take profit price would be 1.5777. So TP would be 430 pips. Keep in mind this is a swing trade and a long-term trade, right? So calculate position size and that's it. So right now, after the 5-step process is finished, right, it's time to execute our trade and manage our trade according to our trading plan, okay? So for example, we entered right here and let's go on the 4-hour to monitor our trade. So this is how we would manage it. Of course, this is not the only way, okay? Feel free to have your own management, but of course also what I need to do is extend our take profits down below. So final TP, as we said, okay. So after price reach our take profit, we take our profits and move on to the next trade. Of course, we don't decide if this was a good trade or a bad trade in terms of a winning or a losing trade, but we did a good job because we followed the 5-step process, right? And we put ourselves in the right position to make money on the long term, okay? So we were definitely minimizing our mistakes with being in the right state of mind, of course, right? Finding a good technical setup and stuff like that. So this will of course help you tremendously. So I would really encourage you guys to follow this step process. Of course, make it your own that fits your trading style, okay? But this could be very beneficial and this could be a key element which could decide if you would be consistently profitable in the markets or not. So guys, that will be it for this video. I really do hope that you found some value or got some motivation or some inspiration for something like this, so you can construct your own checklist before you place a trade, right? This will definitely increase your chances of making good decisions over the long run, okay? So more videos are coming soon on our channel, so if you like what you see and you like our content, feel free to subscribe to stay tuned. Take care guys.